So I do want to quickly introduce to you all Richard Winter, who I met during right prior in May of the pandemic. And simply because my bookkeeper at the time crashed and burned. And we did an interview over Zoom with Richard for that bookkeeping position. And at that time, I knew I didn't need to interview anybody else. He was very clear about what he saw and what needed to be done for our organization. And as it turns out, it only has gotten better and beyond our wildest dreams in terms of a company of his excellence in producing financial reporting. And when I talked to him about this idea that we could take some of this ideas and broadcast it, he was all on board and did a tremendous amount of research on his own, and has spent a little time with one agency and trying to help build up some information that was a little critical. And so here we are today, and he's going to go through a number of financial things, but you're going to be kind of, you might be bored, but then you also might be completely overwhelmed by how awesome the ideas that he's about to bring to the table. So with that, I will bring it over to Richard Winter.
We're going to talk accounting and financial transparency and control. So try and control the excitement. We'll, keep it at a minimum. Okay. Okay. So. Oh, back. So if I said to you, no margin, no mission, you would probably conjure up thoughts of an investment banker or maybe Gordon Gekko, Wall Street, basically make money or die, right? It's one of the best business phrases I ever learned in all my training through the years. But here's the funny thing about it. It wasn't coined by a banker or a cutthroat person at all. It was coined by Sister Irene Krauss, who was a member of the Daughters of Charity. And her calling in life, her mission, was to care for the sick, the poor, and the elderly. And in doing so, she went to work in the Daughters of Charity's hospitals. And upon arriving, as a young lady in her early 20s, realized that their back office processes and controls were so abysmal that the amount of waste and fraud would eventually kill the mission, kill her passion. So she went to school and studied advanced degrees in business administration and finance because she felt the only way she could do what her calling was to get the controls in these hospitals where they needed to be. And she wound up becoming the first female president of the Daughters of Charity's national health system of over 80 hospitals and healthcare facilities. And she is widely taught with that phrase in business schools pretty much all over the place. And I thought that story was very appropriate to what we're doing here today. I'm standing in front of a room of people who have a passion, a drive to dedicate themselves and their time to be of service to their community. That's your mission. That's what you're trying to do. It's very relevant to the last presentation we all just watched. But without the right amount of bookkeeping, controls, and processes in place, the mission dies. You wake up one day with no money in the bank and you can't take the ambulance out. And that's what I'm here to try and help you organize and set up as best I can. To protect the mission, you have to protect cash flow. There's no ifs, ands, or buts about it. You have to have more money coming in than you have going out to keep it alive. And that is critically important. So I transitioned from working in very large corporations, the Bacardis, the Tiffany's, and the Toys R Us's of the world, to working with small businesses for over a decade now. One of the first things I do every time I look at something is a kind of back of the napkin approach, is what I call it, to cash flow. And it's pretty basic, and it's pretty straightforward. You only need a couple things. 12 months or so of bank statements or data, a pad, a pen, or a spreadsheet, and about 2 hours of your time. And I'd like you to take a broader look at cash flow. So you'd be able to lay out all your deposits by month for a year, and then categorize all your expenditures in, you're not really seeing it the way I want, but in simpler bullets. So you'd have your fixed expenses, your rent, your insurance payments, lease payments on your ambulances, all things that don't change. They're the same amount of money every month. And then you'll have some buckets of variable expense. Gas for the ambulances, meals, anything that's variable, that isn't a fixed rate per month. Just break it out by month, simple. Take a couple hours of time and get your answer. Are you cash flow positive or cash flow negative? It's critical. Just get your hands around that piece. Because especially within this particular organization, which is made up, it's not real, just numbers in a spreadsheet, but they're about cash flow positive $22,000 a year. If you went and told me as the treasurer that you wanted to buy a new ambulance that was going to run $40,000 a year, I'm going to ask you where the money's going to come from. So just getting a broad, granular view of your cash flow, how it works, and what your ins and outs are. Then you have to ask yourself, well, where's this money coming from? And is it going to continue forever? You need to just have that information at your fingertips to be able to financially care for the organization you're involved in. And this is kind of the more simpler approach. And we're going to work into more detailed accounting at a higher level, but we're going to touch that as well. But the next thing I want to talk about, which is important, is financial oversight. We may not realize if there are many people in this room who are fiduciaries to your services. Okay, a fiduciary means that there is a confidence and trust in you to oversee the assets, the funds of the service. It's a legal term. It matters. And it doesn't matter if you're a board member, a treasurer, a chief, or a captain. You have a fiduciary duty to protect and care for the funds and assets of the service you're involved in. You might not have signed a piece of paper that says you have it, but I'm here to tell you that legally you're on the hook. No ifs, ands, or buts about it. So how do we go about managing that? It's a really simple concept and term: trust but verify. Trust each other, trust what's going on, but verify that those numbers tie back to real things. And I'm going to walk through a little bit of that as we go forward, but trust but verify when it comes to financial oversight in any organization, no matter what size, is of critical importance. That young 19-year-old man right there, that's my dad. We lost him last year to the pandemic, but he was a really unique guy. His only formal education was a GED he got from the Marine Corps. Yet despite that limited education, he rose to hold the titles of both Chief Information and Chief Technology Officer on Wall Street. Some firms you might have heard of, like Morgan Stanley, big places. And he would always say, from when I was a little kid forward, part of the large reason for his success was he was grounded in one simple principle. When you're in a position of responsibility, you have to care for the firm's assets as if they were your own. That's the level of commitment a leader has to have. So in his case, he was talking about intellectual property and a whole bunch of other things, IT related. But we're talking about right down to bandages, supplies, the care for the ambulances, of the facility. You have a responsibility. And if you start treating those things as if they were your own, the way you would care for your own stuff, it comes through as a leader and people look up to it, and you can drive a place certain places. And when it comes to financial transparency, best practices are critically important, and it's how you go about doing it. And I've set up, I'm going to walk through now about 6 best practices, the way I see it, for an EMS facility when we're talking about finance and accounting. Absolutely the most important best practice is what I'll call segregation of responsibilities. And it's a little cluttered up there, but on your daily accounting flows, let's think of it this way. If the captain or chief purchases the goods, the supplies, or the service, your treasurer should review that invoice. Your captain and chief should then approve the invoice when the goods are received. So they're saying, yeah, we had an order, it's been reviewed, now I've gotten everything that's on this invoice. I approve it. The treasurer should only be allowed to pay approved invoices, period. It takes two people at least to make these processes work, which makes it really hard for them to fall susceptible to fraud and malfeasance. Because you would need collusion across a group of people to do something wrong. So segregation of responsibilities. The same thing reviewing the bank records. That should be a treasurer function and a board member function. We have deposits that need to go to the bank. Before they go to the bank, the treasurer should enter them into the accounting record. Then someone different than the treasurer should take that money to the bank and deposit it, whether it's checks or cash. And that's how, even dispersing petty cash, the treasurer shouldn't be allowed to disperse petty cash and reconcile petty cash. You segregate them. Two different people looking at the same thing to control the features and the function. And reviewing the financial records, certainly a treasurer and board director activity. Here's a different way of looking at segregation of responsibilities. When you have a set budget, how do you go about approvals to spend that budget? This is kind of vanilla because I don't know, any budget is different. All of this is adaptable to size. But in an average organization, anything under $1,000, you have a budget, captain or chief should be able to spend that pretty much on their own, right? It's pretty normal course of business stuff, and it's fine. But when you get over 1,000 and up to 2,500, the treasurer and the captain should say to each other, yeah, we agree, we're going to spend that money. When you get from 2,500 to 5,000, now a board member needs to come along and agree that we're spending this. When you get over 5,000 in this scenario, not just the board member, now the entire board has to say it's okay. These are some basic control features that tamp the brakes and don't have you all waking up one day saying, what the hell just happened and where is the money? It puts some stop gaps in place. Again, treating the organization's funds as if they were your own. You wouldn't just let anyone go run around and spend your money without checks and without reasons and without financial justification. So this is one of the ways you would go about setting that up. Before I go forward any further, I just want everyone to know, takeaways from all of this and everything I'm sharing will be posted to the EMS Access website along with my contact information, should I be able to help any of you out on the road ahead. Next best practices are more financial and accounting in nature. Shared read-only access to all banking and accounting systems. There are no fiefdoms in this stuff. Board members, treasurers, there's nothing anyone can't see. Has to be shared. Now that doesn't mean they should be able to withdraw, everyone should be able to withdraw funds and move them, but they should be able to see them transparently, no problems. Third best practice would be regular reviews of the books of record. When I work with Matthew, we have a financial review for over an hour once a week. Going through last week's activity, accounts payable. Now, I don't know that's probably overkill at organizations your size, but certainly once a month, there has to be a full review with Treasury, operations, and the board, even if it has to take place through an email that says, here are the financial records, here are the bullet points prepared by the treasurer, but it needs to be reviewed and looked at periodically. The treasurer should need to verify every month that there's been a successful bank reconciliation in your accounting system of all bank accounts, credit cards, or any bank loans. What is a bank reconciliation? It's really kind of a simple notion. It says that every transaction that exists in the bank records exists in the accounting system, and there's a one-to-one match, and there's nothing missing. We've properly accounted for all of our transactional activity. That's what that means. Regular review of the system of the accounting system ledgers. What do I mean by that? Go to the audit log and get me a list of the month of all changes that were made. Is someone deleting vendors or changing vendor names to make it look like a check went somewhere else? Get me a list of checks. Smaller organizations, you should definitely be emailing to the board and all leadership PDFs of the bank records so they can look at the imprinted checks. They give you the image on the back. Everyone should be reviewing those. Who were these checks written to? Does it match what's in the accounting system? That's transparency. And no one should have limited control of that, just me. It needs to have multiple people, multiple sets of eyes, trust but verify. And then 6 is kind of something we heard a little bit of in the last presentation. It's a philosophy. And it's a philosophy that says regular questioning of accounting entries and bookkeeping is expected, not insinuating wrongdoing, not from a perspective of, I mean, you harm, I'm accusing you of something. It's just what we do here. We're responsible for these assets. And last, it's required. If you're on the board, or you're required to ask these questions, to know that what you're looking at is real and valid. Philosophically, that's a good place to be. Hey, listen, no one wants to feel like they're being attacked. But as you get to become a treasurer, a controller, a CFO, you know, heavy lies the ground. You have to answer for what you're presenting to folks, and it should be expected. So these are your best practices. Again, all this information will be shared in summary form for you all. Next, one of my most favorite phrases ever in the exciting world of finance and accounting is, if you can't measure it, you can't manage it. And what that means is, if I don't have a way to benchmark my business, to look at it and see what's going on in a way that I can say good job or bad job, I'm kind of managing blind. So if we look at the first bullet, it says, no matter the size of the operation, every organization needs a system of bookkeeping that will allow for easy benchmarking and ratio analysis of operations and financial outcomes. Wow, was it that boring? Isn't that a mouthful? But here's what I mean by that. When we have these good accounting practices going on and accounting is happening, how are we going to know if it's a good job or a bad job? Well, it's by creating ratios and benchmarks based on what's the biggest operational driver in an EMS? Ambulance visits, right? How many times we dispatch an ambulance? Well, I would want to know on an average month what that means to the cost, to the amount of gas we buy, to the amount of bandages we buy, to the amount of oxygen we buy. How does this ratio out? And then what happens when you get good at this is you can look into the future and forecast your needs. God forbid another pandemic, you'll know the spike in visits. You'll understand what that means, what your requirements are to fund, to live up to what the community you're serving is going to need. It also will help you make sure you don't buy too much at times when it's all good in the world and ambulance visits are way down. It's a way of being able to analyze and predict the business looking forward, not back. Everything that's happened in the past is yesterday's news. What we're trying to impact when we're running a financially healthy organization is what's going to happen tomorrow. Don't buy too much, don't buy enough, don't wake up with no money in the bank. These are fundamental things we want to do. Okay, the next step of that is to have a well thought out chart of accounts in an accounting system that allows for automated credit card activity, accounts payable, accounts receivable, and an audit trail. Again, wow, that's a whole bunch. Let me make it really easy for you. Quickbooks Online is the most affordable, best system available, and they actually have discounted pricing for not-for-profits. We're talking in the neighborhood of $40 a month to have QuickBooks Online and to have everything I just said there available to you. When Matthew first asked me to do this, the first thing I did was said, all right, if I was doing this, what would the chart of accounts I would want be for an organization like this? How would I set it up? And I did a fair amount of work on this, and I'm not going to bore you with each line of this, I'm going to point out things that are important. Every chart of accounts has a balance sheet component. You're going to have assets and liabilities. Most important part of your assets is your cash accounts, which are your bank accounts. You know, your operating account, savings account, anything the organization has that way. This is very standard bookkeeping stuff, and this is how you would get started. Of particular note, there is one thing, when we start talking about fiduciary duty, that responsibility that you need to be aware of is a restricted equity or cash account. And here is why. If you were to get a grant or a donation from someone for something specific, let's say I'm granting you $20,000 to monitor and be a part of COVID testing pods or COVID vaccination pods. And I'm giving you this $10,000 for that specifically. While that money will sit in your bank account, it's restricted for one use and one use only. So it sits in the restricted account till it is spent specifically on what it was donated for. You do not want to be in a situation where someone is accusing you of a breach of fiduciary duty, because what that means is they don't trust you to handle their funds. Because you, and I know I'm being a little draconian here, but this is where it winds up, and it gets there pretty quickly. In the world we're living in, I think we could all agree that it's going to be donations that fund EMS going forward to a large part. No one wants that black eye of having people think twice before they're going to give grants or donations to your organization, because there's been some question about financial practices and care of the assets. Fair enough. The next thing that I would do if I had financial oversight is I want to know where my money's coming from. And I would separate it into two places. Patient revenue. We're getting it from Medicare, Medicaid, private pay fees, HMOs, anything else patient driven, or grant and subsidy revenue. Am I getting donations? Like I said, how's my money coming in? I'd want to see it both ways. And then I would want to net out any fees I had to pay for either type of revenue to get to a net income or a gross profit number. Again, I'm here to help. I'm going to walk through this on a rather quick basis. The next thing is on the expense side. First two things I would want to look at is patient care. Okay, now most non-for-profits don't have salaries, but the information will be there if you ever need it. What am I talking about? Medical supplies, oxygen, drugs, lawn and lingerie, linen and laundry, I'm sorry. You know, equipment repairs, am I purchasing minor equipment, or am I talking about dispatch expense? Supplies, equipment, radios, antenna, anything that would work for dispatch. I'd want those two things separated, because when I start that ratio analysis I talked about before, I'll be able to see what impact it had on these two different things. The next thing would be your administrative expenses, and that's kind of your direct operating, the running of the office, bank fees, merchant fees. If you have to hire a bookkeeper, if you have a CPA, all of that stuff is going to fall under your administrative costs of running the service. Then you have the facility itself, your rent, your utilities, taking care of the building, property tax. It's all real expense, and I'd want that on its own bucket, separated out. And last but not least would be the cost of my ambulances. Be critical to know. I want to know what those leases run me, what the insurance for them runs me. And I want all of this broken out to different areas of the P&L so I can understand it better. And then you have your income. At the end, what's left? Now, I didn't mean this to be too exhaustive, and I've actually created a grid that lists each one of these accounts with a description, which you'll be able to download from the EMS Access website after the weekend, of what types of activity should go into it. And I'm also going to give you an uploadable CSV file, which if you're running QuickBooks Online and you just wanted to upload this stuff, you could shoot it right in and create your chart of accounts. So I don't want to get too much deeper than that, but it needs to be thought out in a way that when you're actually looking at financial results, you can actually measure the performance. Now I'm going to go through QuickBooks Online quickly with some cool features and some reasons why I like it. First thing here on the left is the automated bank connections. You can see up top, there are 3 boxes. Those are 3 different accounts connected to QuickBooks. When you update them, green button. Oh, look at that. Oh, what do you know? Hey, look at this. I'm taking this back to the office, Matthew. I'm gonna have this everywhere. So you have 3 different types of accounts connected. When you refresh it, it pulls in all the data. You don't have to do any manual entry. And it's there for you to start either matching to transactions you've put in or categorizing, which is what's going on here. You could either find a match, record it as a transfer, or categorize it to a chart of accounts account. Really cool stuff. Takes away manual entry and error as an issue. The next thing that I really love is on the AP side. When you're entering an AP invoice, you're going to have your vendor, your mailing address, your terms, so you know when to pay this stuff. You can separate it out into multiple lines of what the invoice is. So if I was doing, if you buy medical supplies from the same, and I don't know that you do or not, but from the same person you buy oxygen from, you would break it out into different accounts so you can see the transparency. But the most important thing for review is right there. You can scan and attach the actual invoice to QuickBooks. Company I'm in charge, financially in leadership for right now, if there's 1,000 invoices in the system, 998 of them have the invoice attached right there. There's no reason for filing it. There's no reason for the paperwork. Scan it, attach it. Someone, if you're a treasurer, someone asks you, what is this about? What did we spend it on? Pull it up, click the link, invoice pops up, and you can discuss it right then and there. It's just easy. And it's better, and it gets away from filing and stuff that wastes time and puts your time on the task at hand. It's good stuff. Next is user management and roles. First thing foremost, and I'll put that, you'll see someone here is called the master admin. Only one person in an organization can be the master administrator. And it's critical that the service decides who that is. They're the only person that can kick people out. They're the only person who could turn this off. Whenever I've worked for someone in the past and I've set up a new QuickBooks for them, after I set myself up and put myself in, my very next step before I do anything is to sign them up, watch them sign in, and transfer the master admin to them. They're the owner. It's their QuickBooks. It doesn't belong to me. It's critical you understand who the master admin is. The next thing is, you'll see here, you can have multiple users that have multiple different roles. And those roles can be partial, they can be view only, or they can be full access. This allows for very easy and simple management of those various things we talked about, of the different oversights, of different people being able to log into the same system, see the same things, but not everyone is able to change it. Very important for financial oversight. I have, in my current situation, my colleague, my chief operating officer has access to the very same things I have access to. See what's going on. It's important to have that. The other great thing that QuickBooks has is the ability to attach third-party applications to it. As organizations get bigger, you may need to track people's time, even though it might be as a volunteer. QuickBooks Time is a great third-party app that acts like a time clock. You can use your smartphone to make entries. And if you wanted to know what people were spending their day on or their volunteer time on, it's there. It works really well. And if you don't want it to use super advanced features like billing, it's like really cheap. Like another $10 a month, and you could have people track their time on what they're working on. Another great idea would be Bill.com or Pluto. These are 2 accounts payable systems that sync with QuickBooks and work really well. Why is it important? You are able to select a myriad of invoices for payment, send them off. Bill.com or Pluto will collect the money from your bank account, pay those folks, and it self-reconciles back and forth. So you're not in a situation where you're forgetting about a check that hasn't cleared out there, and then it clears when you have no money. The money's accounted for. It reconciles, and then you have a ledger that shows exactly what was paid, completely transparent. Listen, if you're a smaller organization writing 4 or 5 checks a month, you don't need this. But when you get to the point where maybe you're doing 10,000 in payables a month and it's 20, 30, 40 checks a month, hugely helpful. You're not tracking uncashed checks, self-reconcile, completely transparent, and you can set up those approval processes I spoke about. You can set up approval processes in both of these systems by dollar amount, by a threshold that says someone else has to look at this and say it's okay. Important stuff, and for a non-for-profit, I'm telling you, at around $40 a month, you could hook all this up. This is small business accounting software acting like enterprise software works in a Fortune 1000 company. It gives you that same oversight and that same level of transparency that the big boys get, and they pay millions of dollars for their Oracle implementations and things of that nature. QuickBooks Online has really developed itself to a good place for the small business, for the little guy. And that's why I like them so much. Last but not least, we're going to go back to Dad again. And I wanted to leave you with some red flags to look for. You know, my father used to always say to me, one of the first things he learned in the Marine Corps was, if you're calling someone, whether it's on a walkie-talkie, out in the field or anywhere, and they're not answering you, you have a problem. Well, guess what? If you're asking questions in your organization that are financially related and you're not getting answers, you have a problem. So anyone who can't or won't provide access to a system to someone who, based on our best practices, should have it, you got a problem. They can't answer basic financial questions like, who is this check written to? Can I see a copy of it? You got a problem. If they can't share data in a timely manner, like can I please see this ledger? Or can I please see a list of all payments made to vendor X? They can't get you that in a couple of days. Got a problem. If they refuse to adhere to your version of the best practices I listed for y'all, if they won't do it, there's a reason why. It's a problem. And anyone who gets overly insulted or harshly reacts to being asked these questions is a problem. Like I said, with financial roles comes financial responsibility, and that should come with the expectation that I'm going to be questioned about the work I'm producing. Because it's not my money. It belongs to someone else. In the case of everyone sitting here, it belongs to the service, which is there to serve the public, which is why you all donate your time. So again, I will put all of this in a very neat little 1 or 2 page bullet pointed PDF, along with the chart of accounts information for you all. And Matthew will have it added to the EMS website, along with my contact information. I'm willing to help any of you sitting in this room or on Zoom with anything like this anytime you want. Might take me a day to get back to you, but just use the email provided. So I don't know if Matthew wants to open it to questions, but just one more thing. Since we're in Queens, let's go Mets, very important. Thank you for your time.
All right, thank you very much. Actually, we are going to open it up to questions. If anyone has any, I will walk around with the microphone.
Billings for any one quarter might come in the following quarter, 2 quarters later, or even in the worst case, 3 quarters later. How should we be accounting or booking that income?
It depends on how you invoice. We're talking about billings to like Medicaid, Medicare now, right? It depends. You don't actually, how do you send them a bill?
I have a billing agency that sends.
So a third-party billing agency is doing it, right?
Right.
The next question I'd have for you is, are you on cash or accrual accounting? And you probably don't have that answer right now.
Well, no, we are on cash.
So then you're booking it when the money hits the bank account.
Yeah, it would be much more valuable to me if I was on an accrual basis.
I hate cash accounting because I need to understand that lag. I need to understand what these 100 ambulance visits got me, and I want it matched. But if you're on, I mean, you are allowed to switch, but that's a once a year election at year end. You cannot combine a year, and you can't switch back and forth. You're either all one for a year or you're all the other. There is no back and forth. But I do understand your issue. If I were you, I would go back to my back of the napkin approach, meaning I would have run a separate spreadsheet outside of my books of record, which are official, that said January ambulance trips. When I actually get the revenue, even if it's in April, I would then park it there to get a better understanding. I'll think about this more, but I understand the issue there.
I have one question for you, actually, Richard. So obviously, you are rather sophisticated in the use of QuickBooks and QuickBooks Online. We have a number of people who sometimes have trouble turning on their computers. What would you recommend, other than trying to reach out to you, which is noble as that is, and I love that. As I learned only a few days ago, there are 1,100 ambulance corps of all different varieties in New York State. Obviously, you can't service all 1,100 of them. What's that first step?
Okay, I think the first step is there's two reasons why I like QuickBooks. It's because their online videos and knowledge base is rather robust, right? So you can kind of log in and self-train. You can also log in and ask them if there's any getting started with QuickBooks 101 basic courses in your area or online, and a lot of them would be free. So you have this system that's been developed through the years that's grown to be rather robust, and there's a lot of training available with it, even on YouTube. So no different than my son taught himself how to play the guitar watching YouTube videos. There is a way to gain knowledge of the basics of QuickBooks online and for free. And as a non-for-profit, they're very responsive in customer service. I would say, I guarantee you that they'd be willing to point you in the right direction, to the right class, to the right book, to the right area to find help. And there's always, if you're really stuck, you can always find a QuickBooks expert connected to Intuit for a couple bucks who will help you out. But you're going to get a whole bunch of support for free with the non-for-profit version of QuickBooks Online.
All right, a follow-up question. It's great that this is all set up. Come elections, some agencies have turnover, and the treasurer one day is not the treasurer the next day. And they say, good luck, here's the password, I'm out.
Part of the reason why I spent a lot of time talking today about best practices is because anyone who has done any of this, even at the smallest level possible, there's just certain standards and certain ways this thing works. However, it would be helpful to document what you're doing, or even have someone like me create some basic documentation for you that says, every time we create an AP invoice, we attach the invoice in QuickBooks. Like this list of things that always happens, that's a starting point for a new treasurer to understand where things are at. But I would say the first thing to do that helps you get there is to get caught up on the things I'm talking about. Get your bank reconciliations current so that the next person is part of the reason I created the back of the napkin approach to cash flow forecasting is because every time I walk into an organization, almost every time, the accounting's wrong. And I'm not going to figure out anything by looking at it. So I want to understand if the place is cash flow negative or positive off the bat right away. It's important till I get the accounting right. So it's probably not the best answer in the world, but adopt best practices internally. And these are simple things. Follow them, and then get a one pager that says, this is how we do accounting. Here's how we record our revenue. Here's how we enter an AP invoice. Here's where the rent gets paid. List it. You know, there's some other best practices I could add, like with your AP vendors. If I click on a vendor and I don't have contact name, contact phone number, email address, like everything I need to know about that vendor, I get crazed. Because it makes me have to do double and triple work. So there's some basic things that will make life easier so that you know what you're looking at.